Hello traders, this is a public recap video for DAX for Monday, January the 13th. So this is the chart given to subscribers around 8:20 this morning, so 40 minutes before the open. This is the zones chart, and usually we will have some additional chart, one or two. Today additional chart was this one. This is DAX cash index chart, 60-minute, with the support levels, and this level here was tested in the after hours, so after the RTH session was closed on Friday, and we had a good bounce from it, but it was never tested in the RTH session. About sessions, you can look at them here. This is my site, daytrading.com, and this page about DAX, you will have here information about DAX, about RTH session, future session, pre-market values, and so on. And in blog section here there is one part covering analysis. This is the latest analysis from Sunday, January the 12th, and in this section there will be some educational and other articles. Back to charts now. So this is the morning notes, and in this informative part we were informed about the short-term inflection points on DAX, what is the situation on DAX and on the S&P, what the Asian markets did, what are the news for today, and in this here part what zones are adjusted for today, and this is the trading plan. So for today, bias was neutral bullish, meaning to concentrate on having longs on the good zones, and also to take shorts if setup presents itself. So no fading of ordinary zones. If market goes to the all-time high level, let's say, or makes false break, that would be the short setup for us, or other false breaks. And for long setups to fade these better zones, and the main support for today was this 420 to 445, and that was the one zone that was not tested in the RTH session. After a while you could make, so this is that range, and you could make after a while various channels, patterns, and trend lines on your chart. But let's go from the beginning, from the pre-market session, and let's just delete all of this. Okay, so now when we have cleared all of this, usually I would like to know where the futures session starts. It starts at 1:15, RTH at 9, and US Open starts at 3:30 p.m. So all of these are Central European times. And then we had a open was here around our pre-market resistance zone. Previous cash close was also to the point Friday RTH low level. That means we have a confluence here between two reference points, so that means only that buyers are likely to react there on the first test, and they did. It wasn't really a monster move, but it was a move good enough for you to take it as a scalp trade or to close your shorts from the above. Now let's go to the 5-minute chart and observe this price action from the open. So of course, as day traders, as short-term traders, we are going to operate only with the real-time data. Some trades we can plan in advance, like, okay, if market goes to the main support in some kind of normal manner, meaning not in trend down conditions, but in a normal manner, we are going to take that long. If market makes an exhaustion move, goes above the main resistance, below that making a false break, okay, we are going to sell that. So that is something that we can plan in advance, and we can use resting orders at these zones, trying to catch that kind of possible move. Now remember that resting orders at good inflection points are something that is often neglected, but it is a very good way to get good fills, especially if you're trading CFDs. Now I am here on a CFD chart, which we can use like this with zones. but zones are derived not only from price section but also consulting cash index chart and futures charts, because those are the only valid charts for getting the information about pre-market high, pre-market low, about gaps. Today we had a open gap on futures. Future session started with a small gap up, which you can't see on the CFD charts, and it was right there at this zone 455 to 470. It was just a 10-point gap. Here it is. So you need a futures chart for that, and you also need futures chart in determining pre-market values. On this futures chart, obviously you can see that here this was the pre-market low, and pre-market high was made very close to the open. This was the open, and pre-market high was here. So when you know that, then it is a really easy thing then to calculate these values to CFD and just to put those values on your CFD chart. Let's go back to the CFD chart. Okay, so now we have pre-market high and pre-market low on the CFD chart. Always in the morning notes there will be a line at the bottom of the page. Make your lines about pre-market high and pre-market low, because often those values are going to be important for our trading. You can have setups around these values. You can have a good way to gauge the market strength also. And then we got this market opening and trying to poke above pre-market high, and they were poking, going back, poking, going back. Now in neutral bullish environment we need a good support to go long, so there's nothing here really to buy. We need a dip to buy. So now we are waiting, and from here either the market will go down for us to buy or up for us to sell, or make some kind of setup here. So they did that, and what we had here basically was a false break above the pre-market high. So basically we got a bearish setup in the environment where market is neutral bullish. How do we know that? How can we determine that? We can determine that by looking on the larger time frames. So we had this kind of hard up move and then a consolidation. All of this here is 2.5 months, and then market made that kind of a big boy gap up, basically gap up and go, and now they are hanging there above that gap. Both top and bottom of this gap can serve as support. So all of this, nothing of this is bearish here. Bearish would be only some kind of failure, holding below, all of this holding below the bottom end of the gap. That would mean likely a move again to this wider area of support, or if all of this holds there, likely move higher and attacking the all-time high, because DAX made it to like 50 points from the all-time high, which was made in January 2018, so 2 years ago. Okay, so now we have this kind of setup, and we can take it when market goes back below the pre-market high. That would be our entry point. If you entered this prematurely with a smaller stop, you could be stopped there, like I was. I first got stopped, then I entered again. In this case, stops goes just above here. Target is going to be bottom end of the pre-market range. So as always, we are going to front run references, and what reference do we have while the market is going down? We immediately calculate where is our exit points, and even before entry we have to know where our stop is going to be and what target we could take. And we should really take trades only if there is theoretical room for a 2-hour trade. Are we going to get that or not? That is the different story. That is something that we are going to see during the trade. But when pattern presents itself, as late Mark Douglas used to say, there's nothing to think about. Now we got the setup. This is a short. Stop goes here above these spikes. this is a doable trade with just 15 or 20 point stop. And now you are calculating, okay, what kind of room do I have, because in this environment, which is basically a buy the dip environment, and the DAX could go in sympathy with the S&P, which is a classic buy the dip environment, as we can observe here, and a stronger market. In that case, that means likely we are not going to overstay in these kind of shorts. Now, so these are going to be our exits, like here, and front running this zone, front running pre-market low. In hindsight, you could say, okay, but this from 518 could go, I could hold to here. Yes, that would be correct. But what is the risk here? Always think, what is the risk? What is the risk of this particular trade? The risk is that market is maybe bullish today, more bullish than it showed for today, obviously, and then from here, at this point of time, buyers could just defend previous cash close and Friday RTH low and go higher and make a higher high. Or you could make your entry point here around 510, hold to get like 30 points of profit, only to see it goes back to you to break even. So in day trading, if you want to land a bigger trade, when I said a bigger trade, I mean bigger than 50 points. There is no micromanagement then. You just hold your trade with a stop on original place above the invalidation point. You just hold. And then you're ready to take a -1 hour risk. If you are protective, then scale out at least here, put your stop to break even, then try to hold. So many different traders with this exactly same entry points will have many different results. Here there was a chance for long players to go long on a previous cash close and just to use this zone. Now we are going zone to zone, in this case reference to reference, and just taking this kind of smaller trades. These are not some really sexy risk rewards here. This could be just for 1.5 hour, this could be just for 1 hour trade, because if you're entering here, your stop must go below a pre-market low. That is the invalidation point. And then you see this, like another test and bounce. Now this is now what? This is a bounce with the lower high. So you got high, lower high, lower high, and you could observe this as a triangle also. So this is a triangle, this, all of this here. This isn't really something that buyers that like to buy here, anticipating a market move toward the main resistance and all-time high. This is not something that you want to see if you are a buyer. This is not a good price action. This is a warning sign for you that likely market will go down. And that is why you shouldn't really do nothing around this zone. Observe the lines here. This is the ordinary zones, and now you have this kind of balancing right above that zone. So skipping this and going long here. Alternative trade for the traders with more experience would be this: to short here and having your targets above the zone. And now we come to the main support. This is a zone that we should really take. So this is a trade that we should really take on long side. Target would be the pre-market low. So this is a trade, if you enter like in the middle of the zone, let's say on 430, taking that with a 20 point stop goes to 410, this is 10 points below the zone, this is good enough. Target 470, that is a 2 hour trade for you. Target here. While we are holding this trade, this is a long trade, while we are holding this, or we are flat or whatever, at this period of time it would be a very good idea to make a fib like this and to observe also, do we have some kind of confluence between the zone, the pre-market low, and the fibs? And we have. So all of this here is a confluence. 48.2 pre-market low, 50, meaning half back, and now you see price is struggling here. If you didn't close already, now it would be a really good idea to close. And I have at least a few subscribers, they took a short here also. This is also a very good short, and it could be taken aggressively here, or the thing I would take, I took a break then there, I didn't took this trade, I took just this one here and this one here. So more conservative way of taking this trade would be here, below pre-market low. Why is that? Because this is the pre-market range. This here, between pre-market high and pre-market low. What is this basically? This is basically market that is pushing away price from the pre-market range. They rejected the price. You could also make a trend line like this, and to observe where is the trend line break with the fibs, with the rejection of the price from the pre-market range, and to act here. And then what else you can make, as I always say to traders and to subscribers, while the market is moving during the trading session, if you are an active trader, that means also to draw trend lines like this. Let's connect these stops, this one here, and this one, and now you will get a good line. Okay, now, so all of these are made in this period of time. Market is bouncing here, or maybe it is already here, okay, like in this period of time. And now you're taking this and making a channel using this as an anchor point. Ta-da! And here is the time when US market is opening. Aggressive buyers will buy this immediately with a bigger stop, or if you want to wait a bit, wait for it to go above the trend line, wait for it to take a stand there in this zone, and then go long. In this case, your stop goes here just above this spike, and again you're holding toward the pre-market low. So that would be it for today about these opportunities. And as always, I wish you a very pleasant day and good trading.